Most companies do research and develop, which is go out and spend a lot of money to invest in knowledge development and in the whole discovery and research area, and then develop products and put them in the marketplace. What Connect and Develop does, and it's a bit of a play on words, it's the idea that rather than inventing everything yourself, what we're talking about is getting very clear on how you're going to move the needle with the consumer or the customer, and importantly, figuring out how to connect with the rest of the world with assets, ideas, other companies, inventors, entrepreneurs globally, so that you can bring new value, bring new innovations. So it's based on the fundamental idea of instead of inventing everything yourself, you can connect and bring new products to consumers. So in the year 2000, Procter was faced with a difficult challenge. It was faced with not really growing its top line at the rate that it needed to. It had a drop in its share price, one of the first big drops ever. And I think the company was like most big new business model developments. The company was ready, willing to consider some new business models. Okay. And so one of the things that I was asked to do is pretty much take a blank sheet of paper and ask the fundamental question: in what changes, in what way can we fundamentally recreate our innovation business model to create significant new sources of growth and profitable growth for our consumers, shareholders, and so on? One of the things that I did was I went out and I talked to over 20 companies. And I said, what are the fundamental issues that you have? And one of the fundamental issues is, if you looked at the growth in revenue for companies, it was on one slope, and the growth in the investment being made in innovation and new science and technology was on a higher slope. Okay. Well, when you've got two slopes like this, it doesn't take a genius to figure out you don't have a sustainable business model. Okay. And partly what's happening is that technology is coming at everybody so fast. The internet, sensor technology, new chemistries, moving from petrol-based technologies to biotech technologies and so on. And these put tremendous budget strains on existing innovation budgets. So companies are fundamentally, or CEOs are faced with, the CTO knocking on the door and say, boss, I need more money. Or we risk our brands and we risk our profitable franchises unless we get on with the new technology. Think about the car industry in terms of how the propulsion systems are moving from diesel and gas to electric. Well, nearly everyone sees the same thing, which is tremendous pressure on their innovation budgets, poor success rates. Look at the pharma industry, and there's a trend in the pharma industry to move a lot of the discovery research out right now, partnerships with universities to do the upstream discovery research and so on. And what you see going on here is that companies really trying to fundamentally rethink the economic proposition of research and develop, okay, and to get onto a more successful model. And in the case of Procter & Gamble, we move from less than 10% of our products. Procter puts roughly about 250 major innovations a year in the marketplace. Less than, I would say, 10% of those were coming from the outside, linked to the outside when we started this. And Procter & Gamble, and it's part of the public record, is over 50%. Over half of the innovations in the market have a significant element, either the concept, the technology, the package device, some aspect of it, is coming from an outside source that adds their value is added to the internal value to create something bigger, and often they, Procter and our clients, we're looking for ready-to-go things. So things that might be small, they may be sitting small in a marketplace in Japan that can be grown up to be a big idea for the rest of the world. So the risk changes, and the whole economics of the whole approach changes.